Welcome to Trading Nation. I'm Mike Santoli. Stocks under some pressure today with the Nasdaq's decline leading the way, down about 1% right now. Our next guest is pointing to a shift in market sentiment. Rich Bernstein is the CEO of Richard Bernstein Advisors. Joins us here. Rich, good to see you. Interesting that we have kind of the broad indexes still a little bit stalled here in the last couple of weeks, and lots of rotation under the surface. You see that big cap tech weakness today, a little bit of a defensive tone. What's your main takeaway here from the action?
Yeah, Mike, I think that, there's two things that people always forget about tech. One is that it's the most foreign exposed sector by far. Nothing else is even close. So if you're worried about global growth, if you think trade is affecting global growth, technology is going to feel the brunt of that probably more than any other sector. Number two, and this is, a lot of tech investors don't like hearing this, tech is a very cyclical sector that is always mistaken for growth. This goes back decades, that people always think there's something special about tech, but yet it's an uber cyclical sector, which is exactly what we've seen as the economy has advanced slowly but surely over the past 8 or 9 years. Tech has been the leadership. It's a very, very cyclical sector, and people forget that. So if you're worried about global growth, you've seen it in the emerging markets. What you're seeing in tech is the exact same thing.
I guess the question is, ought you be worried about global growth right here, Rich? Obviously, the big question hovering over the markets all year is exactly how late perhaps we are in the economic cycle. So how do you read that?
Yeah, I would say, Michael, I think that we are late in the we're in a late cycle environment, but I don't think one should confuse that with late in the cycle. Late in the cycle makes it sound like the abyss is minutes away. That's not really where we are. The signs of what would really signal a true bear market are really nowhere to be seen. So we are in a late cycle environment. We are seeing stresses in the economy because of that, tight product markets, tight labor markets. But that's normal, but that's a far cry from the abyss being minutes away.
And that tightness that you isolate there in the economy right now, I know probably feeds into your other kind of big picture call about expecting inflation to move higher by various measures. Are we actually seeing that in the data yet, either on the kind of macro front or the corporate front?
Well, yeah, you have seen it. The most important thing to point out, though, is that the financial markets are already moving in that direction. Look, inflation expectations troughed in June of 16. So it's more than 2 years ago that inflation expectations troughed. Since that point, stocks, and I'm just going to round here because I can't remember the exact numbers, stocks are up about 45%. Commodities are up about 15 to 20%. And bonds, which are hurt by inflation, actually provided negative total return. So here you have massive flows into bond funds at a point in time where the economic environment is suggesting it's very poor for bond and bond returns.
So from this point on, when you've already seen the market kind of reorient itself in that direction, what's left in terms of sort of a portfolio tilt that you might take here?
That's obviously a very important question. The data show that portfolio managers in general are still underweight pro-inflation investments, whether that be individual investors or mutual funds or pensions, endowments, foundations. Everybody's kind of underweight pro-inflation investments, which would be things like energy, materials, industrials. It would be things like commodities, even gold, which has been kind of an investment. Those are the type of things that would perform well through time here if you think we're heading into a multi-year period of more inflation than people are anticipating.
Rich, always great to get your thoughts. Appreciate it. Rich
Thanks,
Bernstein
Mike.
Of Richard Bernstein Advisors. Thanks for your time. And thank you for watching Trading Nation. I'm Mike Santoli.